Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. You ever notice how retirement used to be this glorious finish line that we all strived for, and now it's basically a coupon for slow death at an Olive Garden? The American dream was you work 40 years, you buy a house, maybe 2 vacations, and then you golf until you die. The new dream, however, is pray that your knees don't give out while scanning barcodes at age 74 because Social Security ran out of printer ink. We were told to save money, but nobody clarified what kind of money, because the kind that you're saving, those green pieces of melting paper, were engineered to lose value faster than your faith in human resources. The financial advisors will tell you just keep maxing out that 401k. Yeah, because nothing says secure future like trusting a system designed by the same people who turned healthcare into a slot machine. Here's the truth: retirement is not about money anymore. It is about monetized time, and there is only one asset that stores time without bleeding it away, and that is Bitcoin. Today, I'm going to show you 4 ways to actually retire off Bitcoin, not pretend retire, not eat cat food retire, but actual sovereignty retire. I will cover how the 4% rule is basically hospice care for your portfolio, how the rich literally live off debt while you live off of caffeine, how to beat Bitcoin's own hurdle rate and compound faster than inflation can lie, and finally, how to turn Bitcoin volatility into a cash flow engine so you'll never have to sell the golden goose. By the end of this, you'll realize that the American dream didn't die, it just went off the dollar standard. The 4% rule is one of those sacred finance relics that refuses to die, like a boomer who still pays for AOL. It says if you withdraw 4% of your portfolio per year, you'll never run out of money. Very cute. Except that assumes your portfolio isn't being silently drained by inflation, taxes, and the existential dread of living in a decaying empire where eggs cost $9 and college grads can't afford dental insurance. The 4% rule was built for a world that doesn't exist anymore. It's the VHS manual for a world running on quantum servers. Back then, people invested in bonds and blue chips. They'd get 7% returns, 3% inflation, and live off the difference. Now you get 7% returns if you're lucky, 8% inflation if the government is feeling honest, and the only bond left is between you and your Uber driver as you share the same antidepressant. Bitcoin has averaged almost a 100% compound annual growth rate over the last 10 years. We can call the near midterm CAGR around a 40% if we're being kind of conservative, in my humble opinion. And you're sitting there hoping your Vanguard target date fund doesn't totally collapse when somebody sneezes in Shanghai. So let's run the numbers between the difference in CAGR. If you withdraw 4% a year from your traditional retirement portfolio, you barely survive. But if you own Bitcoin, you could withdraw 1 to 2% per year annually and still grow wealth exponentially. You would literally have more money after spending it. The 4% rule isn't a retirement plan anymore. It's a slow liquidation schedule for obedient citizens. Bitcoin flips that. It turns scarcity into freedom, volatility into opportunity, and savings into a weapon against decay. Because the future does not belong to a guy clipping coupons behind a Dollar Tree, it belongs to the guy stacking sats in cold storage while his portfolio time travels. Now here's a secret that the wealthy figured out centuries ago. They don't get rich, they stay rich by never selling anything. Meanwhile, the middle class, they work 40 years, sell their house, sell their stock, sell their dignity at the pharmacy counter, and call that a retirement plan. Rich people do the opposite, folks. They buy, they borrow, and they die. They buy appreciating assets, borrow against them tax-free, live off the borrowed money, then die and hand it off to their kids, who restart the loop. No taxes, no selling, no exposure to fiat decay. Just infinite leverage on the American dream that you're still making payments on. Now imagine doing that with Bitcoin. You don't have to be a billionaire or own a yacht named Liquidation Crisis. You just need somebody to connect you with the providers like Firefish.io, the Bitcoin native platform that lets you collateralize your Bitcoin, borrow money, and live off the liquidity while your Bitcoin keeps compounding in the background. You're literally living like the elite, but with cleaner collateral and a better moral compass. your Bitcoin sits in cold storage, appreciating while you spend the borrowed decaying fiat on whatever the fiat peasants produce: gas, groceries, or regret. Let's do the math. You've got $1 million in Bitcoin, you borrow $300,000 and just live off the loan proceeds, and then Bitcoin appreciates 20, 30, 40% annually, and then your collateral goes up by 200, 300, 400K a year, and then you're net positive without ever selling your Bitcoin. That is what the rich call tax-efficient liquidity, and what the rest of the country calls too good to be true, because they've been trained to think like debtors instead of capital allocators. This is what Bitcoin enables: a world where you don't have to liquidate your future to live in the present, where your wealth works while you sleep and your debt works for you and not against you. Firefish.io does not let you retire, it lets you opt out of the debtor class entirely. It is the open market for Bitcoin-backed loans. You can create an account, sign up, request a loan, you put in how much you want to borrow, your loan period, your preferred interest rate, and you can see who they can connect you with. This is a company that is legit, not a scam. It is built by Bitcoiners for Bitcoiners. None of that altcoin nonsense. This is a pure play, featured in Forbes, Wired, Bitcoin News. This is legit, kids. Go ahead and check them out. Let's break down how the buy, borrow, die loop actually works, because this is where the real financial alchemy happens. Step 1, you buy Bitcoin. Simple enough, you've now acquired an asset that outpaces inflation, governments, and your boss's annual raise all combined. Step 2, you just borrow against it. You can use Firefish to tap into your stack without touching it, like extracting honey from a hive without killing the bees. Pull out a small percentage of your stack's value, nice and conservative, so you're never at risk for liquidation. Remember, this is not financial advice, this is financial entertainment. I'm just giving you potential possibilities. Step 3, you then live off of that liquidity that is given to you. You pay your bills, you buy your house, you fund your lifestyle, all with the borrowed fiat that slowly decays, while your Bitcoin quietly multiplies in the background like a digital organism that feeds on bad monetary policy. Step 4, your Bitcoin appreciates. The collateral value goes up. You refinance or recollateralize. You rinse and repeat. The compounding effect starts to feel like a cheat code, but it's just math the average person was never taught. Not to get too political, but in my opinion, it's because of the government schools that are out there. My heavens. Step 5, eventually you die, you go to heaven, you are reunited with Christ, and your heirs inherit the Bitcoin and not the tax bill. Because in the fiat system, death is the only tax loophole that is still open to the poor, but in the Bitcoin system, it's a continuity of sovereignty. That's the game. The rich have been playing this for centuries with land, stocks, and yachts. You just get to play it with the best performing asset in human history. While the middle class is selling their time, the elite are selling collateral. While the average retiree is praying that the market doesn't crash, you're praying it does so you can borrow more and buy harder. In this new world, retirement isn't the end of work, it's the end of wage slavery. You never cash out. You just stop trading your time for your money, because the truth is, you don't need to escape the system. You just need to flip it upside down and weaponize it. And I also want to shout out Horizon, the other company I am partnering with, not because I'm trying to give you guys a bunch of ad reads that are totally boring, but this is a company that lets you tap your home equity without debt, monthly payments, or term limits. You can literally sign away a portion of your home's future value in order to get Bitcoin now. The Bitcoin is fully yours to custody however you would like, with no risk of forced liquidation. They are linked down in the video description, and I'll talk more about them at the end of the video. Now, here's where it gets dangerous in a good way. Everyone thinks the goal is to beat the market, but the market you should be measuring against is not the S&P 500. It is Bitcoin's hurdle rate, the cosmic treadmill that destroys complacency. If Bitcoin compounds at 30 to 40% annually, that is the bare minimum that you should demand from your capital, not a 12% S&P return. Otherwise, you're just sitting in the slow lane of financial Darwinism, getting eaten alive by people who know how to compound faster. So, what's the move? You start investing in Bitcoin exposure at a discount. The companies that hold Bitcoin on their balance sheet but trade for less than the value of their Bitcoin per share. When you buy those, you are essentially literally getting free leverage on Bitcoin's upside and the company's ability to grow the Bitcoin exposure over time. You're buying synthetic exposure to Bitcoin's upside that can multiply even faster than Bitcoin itself. Now, these are all not the same company. There's different risk profiles. Everybody has different time horizons. You can have a bad entry if your time horizon isn't long enough. Now, remember, this is not financial advice. I'm literally just speaking facts that MSTR has greatly outperformed Bitcoin ever since they started their Bitcoin strategy. Metaplanet has greatly outperformed Bitcoin ever since they started the strategy. I know that I'm a villain lately and I'm catching flack because nobody can see beyond the time horizon of a few months, but it's just reality. This is a volatile trade. It is not for everybody. For example, Metaplanet is down 80% from its all-time high and has outperformed Bitcoin this year by 15%. That's correct. Metaplanet has outperformed the S&P index by 3x in a historic year for the S&P index, and it's still down 80% from its all-time high. Not everybody can handle the double and triple volatility of a Bitcoin treasury company. That said, when there is embedded leverage on the balance sheet with debt, you can then watch the management team use capital markets tactics to increase your Bitcoin exposure per share that you own. This is how companies outperform Bitcoin. Since April 2024, Metaplanet has increased your Bitcoin value per share by 46 times. That, coupled with a Bitcoin price increase, that's how they outperform Bitcoin. That's how they beat the hurdle rate. Not suggesting that anybody invest in any of these things, because some people literally cannot handle the roller coaster. I can. I love it. I'm buying more, but some people can't. Do your own research, get your own conviction. I'm just saying you can beat the Bitcoin hurdle rate by weaponizing the capital markets. Every single dollar of equity that these companies issue becomes a war chest to buy more Bitcoin, and each issuance increases your Bitcoin per share. This is creating a recursive loop of accumulation that traditional finance literally still can't comprehend. When the market sentiment flips, the MNAV, the market value relative to their Bitcoin holdings, can expand exponentially. A lot of people are treating an MNAV of 1.0 as some foregone conclusion, but we have seen in the past, strategy went down to a below 1 MNAV and then went up after the crypto winter. The truth is that MNAV is literally sentiment. It is the valuation of the company. And yes, the valuation of the company does impact the efficiency of the strategy. That said, this is historically a way to beat Bitcoin's price performance. And that is the difference between owning Bitcoin and owning an amplification layer on top of Bitcoin. And remember, most of the world is investing in mutual funds that yield less than their credit card interest rate. They're playing checkers in a world where Bitcoiners are inventing quantum chess. You don't beat Bitcoin by competing with it. You beat it by riding its own gravitational pull harder than anyone else. And that is how you compress decades of earnings into years. By aligning your portfolio with the most thermodynamically efficient capital engine ever discovered and refusing to settle for anything less than exponential. Because this is the new rule of wealth. If you haven't been paying attention, if your portfolio isn't evolving, it is dissolving. Leverage has a bad reputation because idiots have used it. People blew up margin trading altcoins and decided the problem was leverage. But no, the problem was them. Leverage is not evil necessarily. It is just a magnifying glass. If you're focused, it concentrates sunlight. If you're stupid, it burns your face off. Traditional leverage is built on assets that decay, debt-backed houses, depreciating cars, overvalued equities whose earnings vanish faster than your 401k match after a market correction. Bitcoin-backed leverage, well, that's different. You're amplifying something that actually grows in purchasing power over time. Now, this is an example. I do not think that these numbers are exactly 100% correct, but it is the example. You can just go ahead and pick any company and watch how the debt works. This is literally just the mechanics of the debt as an example, so don't jump at me if the numbers aren't exact, okay? So let's say that each share has 0.7 BTC exposure, but the company layers intelligent debt on top of it. That means if Bitcoin doubles, MSTR can 3 to 4x because its market premium, or MNAV, expands as the sentiment returns. That's not gambling, that's asymmetric exposure, and I talk a lot about how the MNAV and the leverage are kind of correlated in my last MSTR video. I think that the market will reward a higher multiple when they add on more leverage. Right now, it seems like the market really isn't pricing Metaplanet or Strategy at a high multiple because they hardly have any debt at all. And in my opinion, I'm like, oh, well, now is the opportunity. But remember, not financial advice. To me, this isn't necessarily gambling. It's a leveraged bet on a certainty of Bitcoin. That is the asymmetric exposure. That is how adults do leverage. Most people fear leverage because they think that it increases risk. But when your collateral is thermodynamically sound, when it can't be printed, diluted, or defaulted on, then leverage becomes a tool of sovereign acceleration, and it is how you weaponize your conviction. It's how you make time your subordinate. The average American out there is leveraging liabilities, auto loans, credit cards, HELOCs, and you are leveraging permanent capital. They go into debt to survive. You go into debt to multiply. And the difference between those two mentalities is the difference between a wage slave and a capital sovereign. You cannot outwork inflation. You cannot outsave devaluation, but you can outsmart both if you stop thinking of leverage as risk and start thinking of it as time compression. So the question isn't, should I use leverage? It is, do I understand it well enough to let it work for me while everyone else is still clocking in? Now, to be ultimately clear, I am talking about using leverage on Bitcoin, not something that isn't certain. You need to buy the Bitcoin thesis before you use leverage, for the love of God, obviously. I'm just talking about these are literally the mechanics, not financial advice. Debt can help you. That's why I like the treasury companies. To me, it is literally a leveraged bet on a certainty, and all I have to do is wait. Here's the part where I separate the investors from the pilgrims. Everybody wants their yield, but nobody asks where it comes from. In fiat finance, yield comes from other people's debt, interest extracted from someone else's suffering, but in the Bitcoin world, yield comes from volatility, from taming the chaos that terrifies everyone else and turning it into cash flow. This is the Bitcoin yield engine. You don't have to sell your Bitcoin. You don't even have to risk it. You sell covered calls on MSTR, the most Bitcoin rich company on earth, and you monetize the volatility itself. I have a detailed video on a very extremely low risk covered call selling strategy that is done very well. Look up how to sell covered calls on MSTR, put in my name, it'll come up. And I also do one-on-one coachings for people who own MSTR but want education on the options. It is not financial advice, but it is literally education. A lot of people did not understand options trading before they watched that video. If you want one-on-one coaching on how to learn how to do something, I can help you with that. Just send me an email or a DM on X, okay? It's pretty simple. You own 100 shares of MSTR, you sell a call at a high strike, you collect the premium, you sell some of your potential upside, and if the contracts don't get exercised, you literally just keep the premium and your shares. Great. And if it's exercised, all you do is you just sell for profit anyway, so it's a win-win. The key takeaway is that Bitcoin yields no interest, but volatility is yield. Learn to harvest it. You're not trading options, you're literally just harvesting the chaos that is out there. The chaos can be monetized. You're selling fear to the risk averse and collecting rent on their anxiety. And this is on top of the average retiree begging their dividend ETF for a 3% yield, while the currency that it's denominated in is melting 7% per year. You're over here collecting double-digit yield denominated in Bitcoin exposure without ever touching your stack. This is what the modern financial evolution looks like. You stop being a participant and start becoming the counterparty. You stop hoping that markets are stable and start praying that they are volatile, because volatility is the opportunity. Noise to the fiat mind, music to the Bitcoin one. So yes, Bitcoin doesn't pay interest, but neither does gold, and every empire that debased gold collapsed while the gold survived. Bitcoin is digital gold with an options market. It's not just a store of value, it's a yield factory for the enlightened, and that's how you retire without ever selling the future. So here it is, the grand finale, the blueprint, 4 paths to financial sovereignty that make the entire retirement industry look like a nursing home pyramid scheme. Path 1, you sell slowly. The 4% rule is dead, but the math of disciplined liquidation isn't. Sell small portions of Bitcoin over time, 1%, maybe 2%, and your net worth will still climb faster than any fiat-based investor could dream. dream. That's not drawing down, you're skimming cosmic yield from time itself. Path 2, borrow intelligently. Use Firefish to collateralize your Bitcoin, live off the tax-free liquidity, and watch your net worth compound while the system punishes everyone who sold. You're not gaming the system, you're literally escaping it. Path 3 is a leverage exposure. You can beat the Bitcoin hurdle rates by buying exposure through Bitcoin-rich companies like MSTR or Metaplanet. Own the amplifiers, let them do the dirty work of scaling balance sheets while you ride the convexity curve of monetary evolution. Path 4, you just harvest volatility. Sell covered calls on MSTR, generate cash flow without selling Bitcoin or your MSTR, and collect premium off the fear of those who still don't understand what they're looking at. Because in this new economy, volatility is the dividend. So this is your blueprint, not a dream, not a promise, but a protocol for liberation. While the average American spends their golden years arguing with pharmacy coupons and counting steps on a Fitbit, you'll be living off the thermodynamic yield of the only incorruptible asset on Earth. You won't retire because of a paycheck. You'll retire because you opted out of decay. You became your own central bank, your own pension fund, your own sovereign time vault. And one day when your kids ask how you retired so young, you'll tell them the truth. I didn't retire, I escaped. My name is Adam Livingston, and I am the Bitcoin Wizard. I really hope that you like this content. Let me know what you think in the comments. Like the video, subscribe to the channel, keep helping me spread the orange gospel to the masses. Have a terrific day. Do not party too hard. Class dismissed. Once again, a special thanks to Horizon for sponsoring this video. Most people do not realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.